Hello and welcome to this video. I'm making this video on the hottest day ever in London, so do bear with me if there is any background noise with the AC on and some people passing by. But today I want to talk about investing, what my current portfolio looks and why right now is probably one of the best times you'll ever get to invest and how you can make a lot of money through very safe investments. So the majority of my money is on FreeTrade, which is what I'm going to go through today, and luckily enough they have a browser version which I'm going to show, which is still in beta. So let's get right to it. So this is what the dashboard looks like, and as you can see from the side there's two main options, which is your general investment account where you can put as much money as you want, and then there's your Icers. As I've explained before in this video, Icers are very tax efficient places to put your money. So for investing sake in the UK, you don't have to pay any tax on anything you own an Icer. That's if you have a stocks and shares Icer. There's all sorts of information that you can get from elsewhere or through my videos, but in this video I'm not going to go through that. So anyway, my general investment account. So since I started investing I had no idea how to invest, so I kind of did stupid stuff. So this is going to be a reflection of what the stupid stuff I did, and mostly the stupid stuff I did was in my general investment account. So if I go over to max here, you can see that at one point I had a lot of my money inside the general investment account, and right now I'm trying to take out all the money from the general investment account. So when you do make money on an investment, it's called a capital gain, and you do have to pay tax on that, but there is a tax threshold around £10,000, and I have not made anywhere near that since investing on my general investment account, so I don't have to worry too much about paying capital gains tax at the minute. But anyway, this dashboard allows you to check your value of your investments throughout whatever time period you want. So for example, max over the past year, you can see that it has decreased over the years because like big jump here means I've taken out a withdrawal, and a big jump this way means I've topped up my account. Like I said, when I started investing I had no idea how to invest, and I invested in a lot of individual shares, and now I'm going to show you how much the value has gone down. In terms of percentage, you can find out how much percentage value has been decreased, so that's quite easy to see. But if you press the pound sign, it actually tells you how much you lost per stock or share. Everything on my general investment account is at a loss, and this is because of many different reasons. One being the fact that right now there's a financial situation going on where the inflation is so high that the cost of living has gone up, which means that less people are investing, more people are taking out their money from the stock market, meaning the stock market's going down. Also recently the interest rate has increased, and when interest rates increase it becomes more costly to borrow, therefore less people are investing into the stock market, more people are taking it out. That causes a dip in the stock market, which is also the other reason for this video, is to show you that right now the stock market is at a very low, meaning that if you invest, put your money in now, you can gain a huge amount of profit. So of course this video is not financial advice, I just have to add that this is definitely not advice at all. Your investments can still go down more, which is something else that I'm going to discuss. But anyway, in my general investment account you can see that I've lost £600 here, 94, 100, 134, 320, 400, 500, 600, 700, 800. I mean, I totaled this up today and it was minus £8,110. So huge loss. Investing is not for the faint-hearted, or investing as risky as I do, which is all stocks. I know I am young, I have at least 10-20 years of investing, statistically speaking, if I don't die before that. So I know that I can ride out the long waves, and all this money that I put into my account, I have no expectations of getting it all back. So definitely very high risk. Is putting a lot of your money on the line in order to get high risk and high reward. My strategy is to put money into stocks, which is the riskiest of most investments, but the returns can be really good, and especially investing now, the returns can be amazing. I'm going to go off my general investment account and go into my Icer, stocks and shares Icer. This is because since I started my stocks and shares Icer, I've been following my own rules and actually understanding what I'm putting my money in, instead of randomly buying stocks such as like Avaya Holding, which is stupid and has lost 90 something %. Let's go into the Icer. So the Icer, just like the general investment account, allows you to see your max history. So with the UK stocks and shares Icer, you are only allowed to put a maximum of £20,000 into your Icer, and if you withdraw anything, it contributes off the £20,000 essentially. So there is no reason ever to withdraw from an Icer account because it's very tax inefficient. Therefore you'll see that I haven't withdrawn anything and everything just keeps going up. And these big peaks, for example here to here and here to here, are not because I've made a lot of money within like a second or something. It's just because I've topped up my account. Even in my Icer, there will be some losses, especially you can see all these losses, because right now the stock market is going down. It is what you call a bear market. It's going down and down and down. But that's okay because I'm in it for the long run. Most of what I put my money in, apart from Meta and Disney, which is not a lot, like £400 and £200, this is because I strongly believe that these stocks will go up in value. So when I bought them, they were around £175. So, oh, this is dollars, so it's around 200, this is probably around here, more like. So if you can see, the stocks of Meta went down so much that I thought these were bargain stocks, and I bought them. And even then, since I bought them, they've gone down by another 20%, which means that this is one of the reasons why people don't invest, because they feel like their money will be lost, because investments usually value goes down quicker than it goes up, and people are afraid to lose their money, but they don't think long term. Because imagine buying here and then it goes back to here, which you can pretty much triple investments. But you know, I'm not going to give you advice on buying individual stocks and shares, because I really don't recommend buying individual stocks and shares, because even a company like Meta, whatever you want to call it, could go bust, and that means you lose all your money. So what I do in my stocks and shares Icer is only buy Vanguard funds, what they call ETFs. So this one is DAX, which is the German stock market. It's like investing in the S&P 500 or the FTSE 100. It's the top companies in Germany, which include like Adidas and things like that. So the reason why I bought German stocks is because I've been looking at DAX for a while now, and I used to buy it around like £23, and right now it's £18. £18 is like nearly an all-time low. So if you go into max, FreeTrade only really has data from around 2016 in most cases, sometimes 2018, so it doesn't give you the historical graph of this. But this is a Vanguard fund, it's been around for a long time, so you can always find the graph somewhere else. So don't think that you have to only rely on FreeTrade's graphs. You can see that the lows right now are like super low, and it hasn't really hit that low, of course not counting the pandemic dip, which rebounded so quickly. Imagine buying at the low of the pandemic, and then within a few months your investment has doubled. Imagine putting your life savings into that. Crazy, right? And the reason why I not advise, but why I would recommend buying ETFs is because ETFs are very secure, because they invest in individual stocks themselves, but over many different stocks. They're essentially not putting all their eggs in one basket, and they're diversifying their portfolio. So if one company actually falls into administration and it becomes bankrupt, then they will actually replace it with another company. So you don't really have to worry about investment going to zero, unless the German stock market, the entire German stock market goes to zero. Your money is safe and secure, and that's pretty much, you know, as secure as you can get, because if the German stock market fails, chances are all the other stock markets have failed too, and your money is worthless anyway, so why not invest? So in this account, I have put in most of my money into the DAX, around 18,000 in this, but also another 17,000 as a cash reserve. And the reason why I have a cash reserve, and usually people say cash is useless, because cash, you know, your money is actually depreciating. Your money is actually going down in value because of inflation. Inflation is so high right now. Inflation could be somewhere around 12%. You're losing 12% in cash. So why am I doing this? The reason why is, and the reason why I made this video is because right now we are so close to a recession, meaning that the stock market could crash even further. Like I showed the DAX, for example, it has gone down so low. So the other day I purchased it at 1761, and I knew that was an amazing price because it never really goes down that much, and within like one day the investment value was over £500, and just now it's just dipped again. So if I go to one day, at this point it was plus £500. Very easy money. But the reason why I have cash reserves is because if it were to crash, another big crash, say for example if it went down to 14 or 13, I would essentially bet that it wouldn't go down any lower, because that's crazy. A lot of the times when it does dip down, right, when the markets go really down, people lose faith in it. That's why the market goes down. People think that this thing doesn't have value. Remember, at the end of the day, value is what people put towards it, right? What people ascribe value towards. A lot of the time people lose faith in the stock market, the value goes down, but this is because of like quick fire events like war or the fear of recession. But you know what, because these companies actually have value, they produce money for the economy, they're producing goods and services, their value would definitely go up. So if it goes down to something like 13, or not just this, not just the DAX, there is also like the S&P 500, which I will show you. So for example, the Vanguard USA S&P 500, this is one that I would usually recommend people. Very easy to get invested in because it represents the top 500 companies in the US. Historically, this has always gone up. Even during like tough times, it's going down and up and down and up. And that's another good thing, because volatility can be good for essentially day traders. Basically, if you invest like here and then you sold here and then you bought again here, you're making lots of money. But this is something I don't recommend people doing, because you never know when it's going to bottom out and you never know when it's going to top up. The absolute best thing to do is just to keep investing. So keep buying here. This is called dollar cost averaging, and you just keep buying like ETFs or index funds. Every week you can, every month you can, and it will average out, meaning that you're not buying at the lowest, you're not buying at the highest, so the risk to reward ratio has reduced, and essentially you're just going to be making money because all these stocks are essentially assets. As inflation runs rampage on all your goods, such as the cost of living, it's also going to ramp up the prices of these assets. Essentially, if you buy now, you're hedging against inflation, and the value of your stocks and shares are going to increase as a function of time. And buying indexes like the S&P 500 and the German DAX is very safe, as in you're not buying individual stocks. So if one company, two companies, three companies fail, your money is completely fine. So that is exactly how I am investing. I made this video just to talk a little bit about the actual recession that we're going to go into, but I think buying now is a very good idea, and also having some cash reserves, because I think it will dip even more. I think the S&P 500, for example, if we go to max, I reckon it will go back to around 2021 levels, and that's when I'm going to be buying up everything that I can. And even if I buy it, for example, at 56 and it drops to 48, that's fine, because I'm still guaranteed to make money when it goes up. So the worst thing is to be waiting for 48 and it never hits 48, and then the prices go up to like 70, 80, and I'm just going to be bashing my head because I didn't buy it at that time. Stocks and shares basically work like products. If your iPhone was on sale like 30% off, why would you not buy it then? You know the price is going to go back up, so you would rush and buy it then. This is exactly how you should be buying your stocks. If it's at a crazy price, if you think it's a crazy low price, you should buy it. And if you think it's too high, you shouldn't buy it, because why would you do that? Why would you buy an iPhone 30% more than the retail price? You wouldn't. And that's exactly how you should look at buying stocks and shares. So I hope you guys enjoyed this video. If you want me to make more videos investing, which is something that I have a lot of passion towards for some reason, then let me know in the comments down below. I will answer any questions here or on my Instagram. And as always, thank you for watching.